Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from Carriage Services, and let me tell you, it's a real page turner, especially if you're into, well, death. I'm serious, this company is in the death business, but more on that later. They just announced their latest financial results, so we are here to unpack the report, looking into how the business is doing and the moves they are making. The first thing to note is the date of the report. It's dated February 26, 2025, but it includes information from as early as February 24, 2025. So it's pretty recent news we're dissecting. The company we are looking at is Carriage Services, Inc. They are in the business of funeral homes and cremation services. It may sound dark, but it's a necessary service, and like any business, it has its ups and downs, especially with external effects like the pandemic and its impact on mortality rates. This report is an 8K filing, which is basically a current report companies file with the Securities and Exchange Commission, or SEC, to announce major events that shareholders should know about. This report focuses on the financial results for the quarter that ended in December of 2024. So, we're looking at how they performed at the end of the year. The actual detailed financial numbers and explanations are in what's called Exhibit 99.1, which is a press release attached to this filing. We'll scroll down to that later. There has been a change at the top. The board of directors elected Donald Pattison Jr. to be the non-executive chair of the board. Think of it as like a chairman, but not involved in the daily operations. This change happened on February 24, 2025. Mr. Pattison is considered an independent member of the board. Before this role, Pattison was in charge of the audit committee, so he knows the financial ins and outs of the company. The previous chair, Chad Fargason, isn't leaving completely. He'll still be on the board and part of other important committees. With Pattison moving up, Dr. Edmondo Robinson is now the chair of the audit committee. He joined the board in 2024. Now let's get to the meat of the matter, the financial results. Here's a summary from their press release dated February 26, 2025. Now, I'm just going to mention some of the key figures in the company to give an idea of how the company is doing, but don't take it as an investment advice. First, let's talk about revenue. Their total revenue, or the money they brought in, was about $89.7 million for the quarter. After subtracting all the costs, their net income or profit was $5.7 million. There's also something called adjusted diluted EPS, which was $0.49. This is earnings per share, adjusted to give a clearer picture of profitability. Looking at the whole year, the company's revenue was $371.5 million, and net income was $25.9 million. For the entire year, the adjusted diluted EPS was $2.15. These numbers give us a snapshot of the company's financial health and performance. It's worth noting that their profit, the net income, wasn't that high, but if you exclude some costs like strategic realignment expenses and costs related to their headquarters, the company's profit goes up. Strategic realignment expenses were $4.5 million. Corporate headquarters relocation expenses were $1.3 million. Also, general and administrative expenses went down to $12.7 million. One concerning area is their debt, the amount of money the company owes. The total debt was a whopping $532.4 million. However, to balance that, they also have something called total liquidity of $90 million. This liquidity is the amount of cash and assets they can access quickly. Their total field EBITDA margin also increased to 10.1%. EBITDA is basically a measure of profit before interest, taxes, depreciation, and amortization, so total field EBITDA margin measures the profit margin from their operations. The company's leadership seems optimistic. According to them, these fourth quarter results show that they are still committed to growing the business in the long term. The company's management also says that they are working hard to make the business more profitable. So what's the story here? Carriage Services is a company and a business that will unfortunately never cease to exist. The company made $371.5 million revenue and $25.9 million income for the entire year. The leaders have recently changed, and the financial report shows positive signs that the company is growing, but the high levels of debt is an area to watch out for. The company needs to manage its debt effectively while trying to grow. Overall, is Carriage Services a buy? Well, that depends on your risk tolerance and investment goals. The death care industry is relatively stable, but Carriage Services does face competition and economic pressures. Thanks for tuning into Corporate Decoder. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more deep dives into the world of corporate filings. See you next time.